Today's video is about index investing towards early retirement or early financial independence. Before we start, I'd just like to add that this is not advice, this is information only. If you like today's video, give it a like, subscribe to the channel and help me get the content out there. Today's video is about my favourite way to invest, which is index investing. Now, over the last few years, I've started to invest with skill. And my strategy is long-term buy and hold with property, index investing and crypto. And far and away, my favourite way to invest is index investing. Now, what led me to index investing was my previous experience of the stock market. My previous experience with single shares. I was too emotional back in 2010 and 2011 with single shares, got too worked up, got anxious, got stressed out, lost all of my life savings at the time, £8,000, and it put me off investing in the stock market. This was during a negative decade between 2008 and 2018, and I made very questionable investing decisions during this period. Now, towards the end of 2018, I got into personal development, started trying to sort my act out, and over the last few years, that's exactly what I've been doing. And one of the ways I've been sorting my act out is to invest with skill. And as I say, my favourite way to invest is with index investing. Now, looking back, certainly on my negative decade, I realised that I was an emotional investor. And to be honest, I'm still an emotional investor. But with index investing, I've managed to remove them emotions. I've managed to check in on my fund once or twice a year, and that's what I've been doing over the last 3 years. Early 2019 is when I started to research money, and part of that was to research index investing, a way for me to get back in the stock market without getting too emotional. And this was down to the books I was reading. Books by the likes of Robert Kiyosaki, Tony Robbins, Benjamin Graham, Warren Buffett, blah, blah, blah. These books taught me the fundamentals, and this is what I would do if I was thinking about investing in the stock market. Do your research, learn about the fundamentals of the stock market, learn about investing fundamentals, and it will help you out. You learn about stuff like dollar cost averaging, you learn about asset allocation, diversification, you learn about compound interest, the importance of compound interest. You learn how investing in an index fund means you're diversified. You're diversified in different countries, in different markets. Now, with my index fund, you put money into a fund and your fund manager picks X amount of companies. So you've got a small slice of several companies, if you like. So if one of them companies tanks, if one of them goes south, you're insulated. You're not going to lose all your money, like I did back in 2010 when I lost all my money with single shares by investing in one company. If I was starting out investing in my early 20s, for example, this is the way that I would do it, index investing. It insulates you. It protects you from losing all of your money. So yeah, you've got a small slice of several companies, and when you look into it, you can definitely achieve 7 to 8%, even 10% or more on average per year if you invest long term. Learn the fundamentals, invest long term, and I honestly believe it'll make a massive difference to you and your financial future. Now, one of the things I've touched on is compound interest, and this is massively important, and I would imagine a lot of people in the UK and worldwide don't understand compound interest. They probably haven't even heard of it because we're not taught compound interest in schools. And I've touched on it in previous videos. This is a failing on the school system. We're not educated in money. We're not educated in personal finance. So we have to do it ourselves. So what I'm going to do, I'm going to use an example and reiterate the importance, the power of compound interest. Index investing towards early retirement or early financial independence. Example 1. So we're going to use a 20-year-old. So I'm going to imagine that my eldest daughter, I'm going to imagine when she's 20, she's going to continue to invest. Now I've got an ISA for her, and I'm expecting the ISA to be worth about 15,000 when she's 20. The big thing for me is convincing my eldest daughter and my youngest daughter to keep on investing and to not spend that 15,000 on holidays, clothes, nights out. So wish me luck. So I'm going to use that 15,000 and my eldest daughter. So when my eldest daughter's 20-year-old, she's going to have a starting balance of 15,000. Now, when you look into it, when you read the books and you look at historical data, you're expecting an average interest of between 7 to 8%, even more. My eldest daughter's going to deposit £200 per calendar month, and that's going to be over a period of 20 years. So that's dollar cost averaging, despite what's going on around the world, despite market conditions. My eldest daughter, hopefully, will put £200 a month in her index fund for 20 years. Now, if she does that, if she's got a starting balance of 15,000, she achieves 7%, she dollar cost averages with £200, and she does this for 20 years, she's got the discipline to do this for 20 years, she's going to end up as a 40-year-old with a little pot of 164,766. So it's a good sum of money. It gives her options and helps her get early financial independence. It helps her get, now she might not be retired, but she could buy a few properties. It gives her options. What I want to go over is the interest earned. Now, with this example, the interest earned is £101,766. So that's for doing nothing. So it's about 60 odd thousand that she's putting in, and she's getting 101,000 interest earned just by doing a research and being disciplined over the years. Now, to take this further, I'm going to use another example. Basically the same, but we're going to increase her monthly deposit from £200 to £500. So again, my eldest is 20. She starts off for 15,000. She achieves 7% on average per annum, and she's got a dollar cost average with £500 per calendar month. Now, after 20 years, when she's 40-year-old, she's going to end up with a balance of £321,044, and the interest earned is £186,044. So this gives my eldest daughter serious options. Now imagine being 40-year-old and having over £300,000 in your index fund. That's serious options. You could go out and buy 10 rental properties and you could practically be financially independent. You would certainly be heading towards early retirement. So this is just a couple of examples to show you the power of compound interest. And again, wish me luck. Hopefully my eldest daughter, my youngest daughter, will continue to invest from 20 and onwards. They won't waste the money that I'm saving, that me and the mum are saving in the ISA. This has just been a video to go over index investing and how it can lead to early retirement or early financial independence. And like I said, it's my favourite way to invest, and I genuinely believe that if you start investing in index funds, it'll make a massive difference, especially if you've got the discipline, especially if you've got the delayed gratification and you can do it for 15, 20, 25 years. It'll make a massive difference to your financial future. Personally, I invest in Vanguard, and the fund that I use is the Life Strategy 100 fund. Now, I believe that I'll get 7% over the years, at least. This isn't factoring inflation in. The examples I've used, what I've been discussing, is just to demonstrate the power of index investing, the power of compound interest, and just to tell you really what my favourite way to invest is and how powerful index investing can be. Once you get your head into index investing, you learn the fundamentals, you'll learn about inflation anyway, and you'll factor it in to your calculations as you get going. If you don't invest in the stock market, just give it some thought. Be open-minded. Don't stick all your life savings in the bank, the high street bank. What you're going to get, less than 1%. Now, what I've learned when I looked into index investing is that you can achieve at least 7%. So just compare that 7% figure to less than 1%. If you're investing for 20 years or more, it makes a massive difference. Just think about the examples that I've used in today's video. What index investing can do for you after investing for 20 years. I honestly believe that index investing will help you and your financial future. It will help you dip your toes into the stock market. When you look into it, you realize the importance of investing. Don't just focus on work. Read Rich Dad Poor Dad by Robert Kiyosaki and you'll understand the importance of business and investing when compared to just focusing on your job. It's massively important. So just a bit of food for thought. I just thought I'd do a quick video on my favorite way to invest, which is index investing. For some more info on index investing and for some books that will help you with index investing and investing in general, check out the video description below. And if you've liked today's video, give it a little like, subscribe to the channel and help me get the content out there. And thanks for tuning in.